yesterday we saw the NSE down 0.2%. It's down 3.1% for the year. But yesterday, an interesting headline that came through was the pressure that we saw on the banking sector. Is there any specific reason why investors are selling off the banks?
Well, it's a bit strange, actually, and I really can't put a finger to the behavior. About 14 banks lost some points yesterday, but you've got to bear in mind that we're getting to the end of July now, and the end of June signified half year for all the banks, and pretty soon we're going to have the results out. Half year performances are going to be made public. As we cross over to August, you've also got to bear in mind that we're getting pretty close to the September deadline for the 8 rescued banks. Now, what's going to happen to those banks is going to say a lot as to whatever shocks or impact there is in the banking industry. So I just want to watch what again happens today to those stocks. Let's see what movements occur. And if there are going to be any pronouncements from the central bank in terms of the industry, we'll be able to have a fair idea of the impact of what's going to happen in September.
Yeah. Now, but I suppose looking at the fact that we are seeing the banks under pressure and we have got those results coming up, surely can we read into this that investors don't expect much out of the results, number one, and secondly, that they are not very sure of the outcome of that end of September deadline with the central bank, despite the reassurances that have come through from Governor Sanusi?
Well, one thing is certain, we're going to have less than 24 banks from October this year, if it all goes the way it's supposed to. Certainly some banks will be acquired or merged, so that's a reduction there. But which ones will not exist anymore because of the central bank's actions, we're not pretty sure. As you know, the industry is pretty much connected. This just may have its effects on other banks that are doing well in the industry. But regardless of that, I do not see how investors will have the proper hints as to the performances of the banks right now. I guess it's just about them wanting to be defensive. And then bear in mind that we had a 5-day streak that was rather bullish just before yesterday. And for some people, it may just have been time to take some profits on whatever gains they had made. Bank stocks are the most liquid, they're much easier to sell, and that may have also accounted for the offloading of these stocks.
Absolutely. Now let's take a look at, we have seen quite a number of results coming through. I just run quickly through some of them. We saw Total Nigeria coming up with second quarter results. We also had results coming out of Stanbic IBTC, Loan Union, First Uranium. We had results from University Press, FTN, Cocoa Processors, and Sovereign Trust Insurance Purposes. What have you made of the numbers that have come through so far? Should investors be flocking to the markets?
Well, clearly, you can just break all that into sectors. With Total, it's a good play in the oil and gas downstream sector. Beyond Total, we're also aware of what's been happening with O&O. But Total is a performer in terms of the corporate benefits which it tends to get. So I see that it's likely investors will flock in that direction. Cocoa processors have a lot to do with exporting what their products are. Clearly, it's a foreign exchange earner. Shareholders would want to hold on to stock like that.
Cool. So let's go looking for investment and let's go looking for value in that market. Now, you have identified the food and beverage sector as well as one such sector. Why would you see value in this sector, particularly given the fact that, you know, for us from outside, when we talk about Nigeria, we're talking oil, we're talking the power shortages, etc.
Well, there's one thing about that sector. You've got to bear in mind that people are going to eat, and a lot of companies in there produce fast-moving consumer goods. Just checking the statistics, the consumer price index rose about 12%. And you know that for these companies, their revenues play a critical part in terms of covering their costs, and therefore in terms of gross profitability they can make. That profit in turn goes to shareholders as corporate benefits. Now that's why I'm looking at that sector. A lot of things that happen there will determine what's going on in the economy. If you do have inflation overreaching, if you have a reduction in credit in the economy, if you've got the disputes of the minimum wage and the labor impacting on people's purchasing power, then you're going to have a slowdown in terms of what sort of sales, revenues, and returns those companies can make, and what happens in the industry. Sure. You know. Yeah,
we've got 2 minutes to go, so let's quickly run through your stock picks. You've got Flour Mills of Nigeria, you've got Nestle Nigeria, you've got Cadbury Nigeria. Let's just quickly go through, first of all, Flour Mills. What's the investment case there, particularly given the fact that you highlight their battle with costs?
Well, interestingly, Flour Mills do realize where they are in the market. They are a leader, and they are working towards positioning themselves to maintain their market share. There's extensive capital raising activity going on right now with Flour Mills to fund the expansion program. And I can see them placing themselves, you know, where they can actively take over their markets. Another interesting thing about Flour Mills, though, is that much as they're classified as a food and beverage company, they also have significant investments in cement, which is another area that brings about substantial returns.
Okay.
It's a good-to-go company.
Cool. Let's talk about Nestle Nigeria.
Right. With Nestle, again, that's straight-laced, fast-moving consumer good. They're on the up and up. They're a market leader any day. Their products are all over the place. And in terms of, if you looked at the prices yesterday, there was no movement in that stock in spite of the market falling. It's one of the shares that investors tend to want to take on and hold whenever it's available, in spite of its nominal price. It's one of the few shares we have with prices over $1 if you convert it from the Naira price. Again, that's a stock I'll recommend, good to go.